it's a hard thing to take that step back and say, I am actually creating value by stopping to think. But I do think the evidence is there. Like some of the most successful people, just they take that time and they do spend time on thinking.
Warren Buffett, so he's obviously one of the greatest investors to ever live. And Charlie Munger, his longtime partner, would say that it was the funniest thing ever, because they would look at his schedule and it would say, for the whole day, his schedule would be get a haircut. Like that would be his only thing, because he was just thinking and he wanted to leave that margin open to think through different investment ideas.
If you went and bought, went on your Robinhood app and bought stock and you were getting a 12% annual return and getting bumps as you said, everybody would be happy with that.
I would say where I have the edge there is I knew real estate.
Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Will Harvey. He started in real estate in 2015 as an award-winning loan officer before transitioning to direct investment in 2019. He has hands-on experience as both a limited and general partner in syndication and now manages multiple real estate funds. So Will, I'll stop there. There's a lot more interesting stuff in your bio, but I'm going to let you tell it. So first, thank you for coming on the show today. Really appreciate your time. I really appreciate you being here, and I'm looking forward to the conversation.
Yeah, thanks so much for having me, Jason. I'm honored to be here.
Let's start just with hearing about you. Let's hear about your background. I know you it briefly mentioned loan officer in 2015, but just tell us a bit about yourself and what got you to where you are today.
Yeah, so I'm a double college dropout. The first dropout was to get sober. And then the second dropout, I ended up transferring and playing football to a small school in Ohio. And I wasn't there too long until I had double hip surgery, and that was the end of that. So came home in 2015 and was thinking about finishing my degree, but a lot of my credits didn't transfer. So I ended up a family friend got me into the mortgage business. And I started out on a track to become a loan originator. So I started out just doing all the back office stuff, checking boxes and processing files, and just doing all the boring stuff that was not very fun. But then about a year later, in late 2016, I went off into production and I just lived, breathed, and slept mortgages, and the business kicked off pretty quick. Praise the Lord. And it was a fun run. I started buying. I bought a few rental properties during that time. I had really low expenses and lived frugally, so I was able to pretty much plow everything that I was earning back into real estate. I definitely caught the real estate bug at a young age. And that was great, except I felt like a hamster on a wheel. I was making good income, but it was W-2, so I was taxed on it heavily, and it just I felt like it was golden handcuffs, where there wasn't any equity, there wasn't any. I didn't own anything in the business. All I was doing was I was a high paid W-2 employee, but I was still just a W-2 employee. And so I started just thinking about how to get more into real estate. Realized I got to 3 houses and just realized that the whole tenant management, single family houses is not for me. I just hated every bit of it. So I started learning about syndicating deals, primarily multifamily. That was really what attracted me. This is back in 2018. So started learning about that, and then 2019 I got involved in my first few deals in that space as a small GP, and then I really transitioned and focused only on investing as an LP. at the same time, I left the mortgage business. This is late 2019. I left the mortgage business, started a house flipping company with a partner, and that was a great. I enjoyed that for a while, and I was basically I was basically making income, generating cash from the house flips, and then I was investing them into multifamily syndications as a limited partner and taking advantage of being a full-time real estate investor per the IRS and getting, the bonus depreciation and all that. So it was a good few years where I paid legally very a very low tax rate.
Yeah.
So that was good, but all the while I was just kind of migrating more and more to the finance side of things. I just didn't like being an operator. I did a couple more in 2022. I did a couple deals, a wedding venue and a boutique hotel. Me, another general partner, bought with some more silent partners, and I don't have a huge operating role in those, but I still am. The buck still stops with me and my partner, and I just realized that I'm not, I don't really enjoy the operations side of things. I more enjoy being on the finance side of things. So in 2023, I started a fund, a small friends and family fund where I put a good chunk of my own net worth in it. And then, um, 8 or 9 other partners invested as well. And I'm the general partner of that fund. And I went out, and my goal was to invest in different deals as a limited partner. Um, we had some money sitting while we were waiting and looking at opportunities to get invested in. We had some cash just kind of sitting on the sideline, earning a low rate of return. An old buddy from when I was in the mortgage business called me, and he's like, "Hey, I know you started this fund. I have this borrower that he's a great borrower, but he just can't qualify for anything here because all his income is in another country. But he's putting down 75%, and he's buying this new construction, brand new asset in a good area, 10 minutes from where I lived at the time. He's like, do you want to do a hard money loan? He's willing to, pay 3 points and 10% interest. And before he even got done with that, I was like, yeah, that's a no brainer. He's putting down 75% and I'll be in first lien position. There's virtually no risk there. So I did that deal, and that kind of got me hooked on the hard money. I caught the hard money bug, and I've really focused on that the last few years, and doing that. And then we invest money in the public market real estate companies as well. And that's my core focus right now is hard money, and then investing in the publicly traded companies.
Nice. We'll come back to the fund. I want to
Sure.
talk about some of the things in your background. I with the podcast and I guess my own experiences, it does seem like a lot of people in real estate, you try a thing, maybe that's not you don't love it, maybe that's not your thing. You try a second, you kind of bounce around a little bit and see what fits best with you. And it's always interesting kind of see where people end up in that. And I think I think a lot of people like the idea of, sort of being an operator, or think they want to be an operator. And then they're, met with some of those operational challenges that tenants present, and it becomes much less appealing, myself included. I think there are things I like about operations, but the tenant side of it is shockingly unpleasant at times.
Yes.
And so I mean, I think that's like a very important thing for people listening. I always think you've got to kind of answer to yourself a couple of questions. One is, do I want to be active or passive? And I think the ability to know that sometimes takes some trial and error. Like you might think you want to be active, and then you're like, no, I just like the idea of letting someone else handle this, and thus you're being you're diversified in your investments. But I think figuring that out is sort of number one question, and then you've got to figure out what asset class, because just in your background, just listening to your story, there's a lot of different ways to be involved in real estate. And you talked about flipping houses, you talked about lending, you're talking about, even the, public market REITs type of scenario. I mean, there's so many different things you can do, syndications within all of those different, markets, different asset classes in terms of multifamily, mobile home parks. I mean, it's just a very, very varied thing. And so I think some of it's just figuring out what fits for you. You walked us through kind of how you got to that point of seeing what works for you. How do you ever talk to people about, like, do people come to you and say, well, I don't know, what should I do? What do I want to do? I've got some money, or maybe I don't have much money. What do you think I should try? Do you have suggestions or like an algorithm that you think people should use to approach where their fit might be?
It's a great question. I wish I had a good answer for that, but I really don't. I mean, if somebody came to me, when I was starting on the track of buying houses, I mean, I at the time I was like, I'm just going to buy 100 houses. I'm just going to buy one at a time and get to 100 houses, and then I'll have a ton of cash flow and it'll be great. And I got to 3 and was like, this is not for me. So I think that everything in theory makes sense, but then in practice, it's totally different. So,
yeah,
I think a lot of it is you have to figure it out on your own. And I didn't know that I would like lending or like investing through the public markets and finding really interesting mispriced opportunities there that a lot of people overlook. I didn't know that was 10 years ago. I'd be like, that sounds so boring. There's no way that I would ever want to do that. I want to own my own properties and be able to touch them and feel them and, go see them and fix them. And that sounds exciting to me. And to a lot of people, like, there's guys we lend money to and they have, hundreds of rental properties and they love it. It's just they love the chaos of owning all those properties, and they're good at setting up systems and having property managers in place. And that's just, they enjoy that. They need all that action, if you will. Whereas I don't. I enjoy sitting behind my computer, being in an Excel spreadsheet. I mean, I use Claude now. I don't really use Excel, but that's therapy for me. Looking at deals, analyzing stuff. That's what I enjoy. And I've just realized that, like you were saying, the tenant stuff that isn't really talked about a ton. Usually it's just, invest in real estate. It's, an alternative asset, and it's that you're diversifying, it's uncorrelated from the stock market. It's passive income. There's not much passive income when you own a property and are active. I mean, it's passive-ish, but it's not totally passive. The only way it's totally passive is if you invest as a limited partner. So, I just, to get back to your question, I just think it took me almost a decade. It took me the better part of a decade to figure out what I enjoy. And it was a lot of, let's try this. Nope, that's not it. Cross that off the list. Let's try this. Nope, flipping houses isn't it. Let's cross that off. And just, kind of doing things until you figure out what really excites you, and where you go to bed and you're like, I just can't wait to wake up tomorrow and start doing that again. It takes a while to get to that point, I think.
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress. giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Maybe that's the answer. I mean, maybe you've got to, I guess it should be evident from the, all the podcast interviews where I've talked to people and they've moved, kind of their focus and shifted things. And sometimes it's based on what's, market dynamics or what's happening in the economy and things like that. But like, ultimately, like you said, like finding the thing that makes you excited to get up in the morning, each day is going to be tricky because all this stuff is hard. Like it's hard work, even if you're investing passively, it's hard work. And so I think that the important thing for people to maybe take home from what you just said is you're probably not going to figure it out overnight. Like you're probably going to have to try a few things. You're probably going to have maybe a couple of investments that don't work out before you find the thing that really fits. And that approach will just let people be shifting the expectations, right? Like, instead of thinking I'm going to, I heard a podcast, Will talked about hard money lending. I'm like, I'm going with that, and that might not be the thing for you. Maybe it is, but like you've got to do some trial and error.
Yeah.
With your fund, so it sounds like you sort of accidentally fell into that, hard money lending opportunity.
100% accidentally.
I've heard people, yeah, and I actually think that's how a lot of investors and entrepreneurs get into certain things. They find something accidentally and it works great, and they're like, "I'm gonna try this again.
Yeah.
Oh wait, I'm gonna make a business out of it." But the thing I wanted to point out on that is I've had people say to me before, like people outside the world, like, why would anyone ever do that? Why wouldn't they just go get a bank loan? And you touched on some of the reasons for this particular person, but once you're in that real estate community, you find out that there's a lot of reasons why you wouldn't necessarily just go, call Bank of America or Chase or Wells Fargo and say, I need a loan for this flip. Maybe talk a bit about that. Talk about, kind of what you experience with the people that you're lending to, some of the situations that it might be appropriate for a, private money, hard money lender.
Yeah, so people don't always get a bank loan because there's simply a lot of red tape, and also these properties that people are buying to flip or to add value to and then refinance into a permanent loan. On the front end, when you're buying them, if you're getting a good opportunity, it's usually not going to be perfect, and it's not going to be a turnkey asset. Otherwise, you wouldn't be able to buy it for as deep of a discount. So the guys that I work with, and back when I was flipping houses, we were trying to buy stuff that was a fraction of what the after repaired value of that property would be, and that's how you make money. So it's not you can't go in the MLS and find some perfect cookie cutter property that needs no work and buy it at 70 cents on the dollar. It just doesn't happen. So what guys will do is they will find a property that needs a lot of work. Maybe there's cosmetic issues, structural issues. There could be all kinds of issues wrong with it. And a bank will not be able to do that type of property. They will not be able to loan against a property like that. And that's the gap that hard money lenders fill. So instead of having to use your own cash for something like that, you can go to a hard money lender, and as long as, assuming that everything with the borrower checks out and makes sense, if all that works, the deal works, and everything is kosher, then we can close as long as we get insurance and a title commitment. we can close in a matter of days. I mean, it's our own money. We're not beholden to institutional capital where we have a lot of rules that we have to follow. I mean, it's our own money and we make our own rules. So that's the beauty of hard money, is we can tell someone confidently, yeah, we can do this loan because it's our money. We don't have to worry about some underwriter saying no to it. So that's people pay a premium for that. If somebody is buying a property, they can, in a distressed property or something like that, they can offer someone a 10-day close or even a 1-week close. And I mean, that's unheard of in the traditional lending world, but hard money lenders can do that. And now your offer is pretty much as good as a cash offer, because it's closing that fast and there's no red tape and there's no, there's no financing contingency that they need or anything like that. So people pay a premium for that. They pay points and fees on the front end, and then the interest rate is higher. It's about, I don't know, 500-600 basis points higher than a traditional bank loan. So you're paying for the premium of being able to close quicker with less red tape. But it's something that definitely serves a purpose, and I think will continue to do so.
Yeah. I mean, speed alone is maybe one of the biggest points for hard money lending. If you found a property that you wanted to flip and it qualified for conventional lending somehow, like you found that perfect scenario on MLS where it is, undervalued, it's going to take still 2 to 3 months to close that traditional bank loan. Like it's gonna take a long time because that's how long it takes with them. And in the flipping game, especially if it's kind of an easier cosmetic flip, you expect to be in and out of that project in 2 or 3 months. And so if you
exactly
spend all your time waiting for that loan to close, you basically might have missed your shot. You might have missed the window. The market could have changed. Someone else is going to come along and take that project away. Like you've got to be able to move quickly. So it's like a lot of those properties, they're not even going to qualify for conventional lending, but even if they did, the speed is well worth that additional cost in fees and interest because of your ability to get it done and kind of just recycle and move on to the next one, which my understanding is that's kind of one of the appeals of being a hard money lender too, is especially to flippers, it's a short time frame. So your money, you don't expect it to be tied up for a long time, and you can kind of turn around and do the same thing with the same dollars in a fairly short amount of time. Is that, do you experience that? Does that actually play out for you within your fund?
Yeah. You're saying, are we able to recycle the capital quickly?
Yeah.
Yeah, and we want to. I mean, that's how we boost our annualized returns. I mean, we want people will sometimes ask me, is there a prepayment penalty? And I'm like, no, absolutely not. We want you to pay this off as soon as you can. If you pay it off the day after we fund it, that would be great for us.
Yeah. Right.
Because we collect points and we collect fees on the front end. So the more that if we have the same $100,000 and we can loan it out, get paid back, loan it out, get paid back, we're collecting fees in points each time we lend it. So all that adds to the annualized return, and it really juices it up. So we don't want a loan to hang out there for very long.
Yeah, it's a higher interest rate. Almost, I would think, like, in case someone has to keep the loan a little bit longer, you're at least generating a high enough return on the interest. But realistically, the way you make money as a hard money lender is with those points and fees to sort of close the loan over and over
That's
again.
Right.
So it just makes sense to kind of keep that wheel rolling as quickly as possible.
Yeah.
talk to me about the public markets. I don't think I've heard anybody talk about that with regards to. I mean, I think I've had people mention REITs, but it's not typically a piece of someone's fund or strategy that I've heard, at least on the podcast. Tell me a little bit about your approach there.
Yeah. So this isn't, I'm not trying to find REITs and clip a, 5% dividend or something like that. I'm trying to find, something that is very mispriced, where we have an opportunity to make a good bit of money if a catalyst is if there's some kind of catalyst in place to unlock value. So a common example that I talk about, and the first one that we did, this was also an accidental type of thing. So I had a very, very small fund, about $500,000 or so in it, with it was myself, and then 2 immediate family members. So nobody from the outside was in it. And I was just going out and trying to find just mispriced things in the public markets, not even necessarily real estate related, but just something that, I could understand and wrap my brain around, where it seemed like this is mispriced, and for whatever reason, it's going to re-rate in a certain time frame, a year, 2 years, whatever. So I started looking at those companies. This is a few years ago. And while I was doing that, I stumbled upon this really, really interesting opportunity. It was a liquidating trust that traded over the counter. So it wasn't on any major stock exchange. It just traded as an over the counter security. And it was formed in connection with JCPenney's bankruptcy back in late 2020. So JCPenney filed bankruptcy, and then these 2 massive mall operators, Simon Properties and Brookfield, they bought them in a joint venture out of bankruptcy, recapitalized them. And what they did was they separated JCPenney's operating business from their underlying real estate. So JCPenney,
Interesting.
I didn't even know this, but they owned a lot of the real estate where they operated out of. So I thought that they just leased everything. That wasn't the case. They owned about 1/5 of all the stores that they operated out of. So what these guys did was they took all that real estate, they spun it into this liquidating trust, and gave all the shares in it. Technically, they're called certificates. They gave those to all the creditors. So all the people that were owed money in the bankruptcy, they got these shares of this liquidating trust that traded over the counter that they didn't want anything to do with. And as you can imagine, they just sold them off, and no one wanted it. And this thing was just overlooked like crazy. Retail was also, a couple years ago, retail was just, it just didn't have, it didn't really, consumer sentiment on it was just not very high. So, for all these reasons, the stock price was just very low. And I started looking at this, and I was like, well, I can buy this. I did all the math and what the total number of shares and what they owned. They had no debt, by the way, which is awesome. But so I'm looking at it, and I'm like, well, we can buy this today at an implied cap rate of 14%. And mind you, it's a 20-year triple net, absolute triple net, master ground lease to the new well-capitalized JCPenney that's owned by those 2 companies I mentioned earlier. So the lease was really, really solid, and yet it was trading at a 14 cap, which is just insane. I mean, there's distressed vacant office buildings that sell for lower cap rates than that. So a 14 cap was just nuts. And to anyone listening that doesn't understand, the higher the cap rate, the lower the price. So they were the implied cap rate that we could buy this thing for publicly was 14%. And meanwhile, they were turning around and selling these properties on the private markets to real estate investors they were selling them for 7 caps. So the math there is that we're buying these properties for 50 cents and they're turning around and selling them for $1. So it was purely an arbitrage play between public and private valuations. We could buy it through the public markets, buy this portfolio of 130 properties for 50 cents, and they're turning around and selling them for $1. It's pretty. It didn't take a brain surgeon to figure that one out. And also the lease that they had, the income from that at our basis was yielding us monthly a 12% annualized return. So just from the lease income, we were getting a 12% cash return. And then when you factor in the distributions that they would make from, when they would liquidate properties, it was a phenomenal, it was a great one. And it it kind of, the light bulb went off and I realized that there's got to be more of these out there. And I started looking for them.
Yeah. I mean, you downplayed, you downplayed this in terms of the level of strategy here, but like, I've never heard of that before, ever. I'm sure people have. I'm not. I wouldn't say I've heard of everything, but I've never heard of that before. I didn't know these things. Like, I didn't know that was even a thing I could go out and look for. Yeah, it's easy to say, oh, I can buy it at 50 cents and they're selling them at $1. Like, sure, that part of it is pretty easy to wrap your head around. But like, I wouldn't know how to find that out. I wouldn't know how to. So I mean, but it sounds like a phenomenal strategy. If you got to go find the opportunities, which is like, it goes back to, it kind of takes me back to what we talked about in the beginning, is like figuring out what the thing is that, you're good at, you enjoy doing, you can find some passion around, because like whether you figured that out on accident or however it all fell into your lap, like figuring that out is a pretty exciting thing to then go spend time on, how do I find more of these? How do I continue to discover this type of opportunity? Like that is the job. That is, the work that you're doing. So I mean, it's fascinating to me. And I would say, sort of a very valuable way to spend time if you're able to, achieve such returns, and like easy returns, right? Like it's like if you went and bought, went on your Robinhood app and bought stock and you were getting a 12% annual return and getting bumps, as you said, like everybody would be happy with that, like really happy with that. So it's kind of like, it sounds like you spoke about it as if it was like the simple thing, but I don't know that there's a lot of people figuring that out.
So I would say where I have the edge there is I knew real estate. I had been in real estate for years. I'd invested in properties, and a lot of these fund managers, they've never operated a business. They've never owned real estate. So I have an edge over someone like that. I know what. I've operated real estate. I know how to look at a deal and figure out the NOI and figure out what to value it at based on a cap rate. And, with AI today, it just helps with all that tremendously as well. And it can really parse through information quickly and help you look through a deal, find trends, find stuff that's, you should avoid. But yeah, it takes a lot of just reading annual reports, quarterly reports that are on the SEC's website that all these public companies have to file. So it's not like this was, I went on CNBC and found Jim Cramer talking about, something like this. You'll never see him talk. He only talks about the sexy stuff, and usually he's wrong. I think there's something like if you bet against whatever Jim Cramer says, you'd be
an anti-Cramer index or something like that. Yeah.
Right. Yes. Yeah. Or you'd make a lot of money.
That, and I've heard of it. Like it's that well known. It's like,
Yeah, exactly.
don't do what he says and you'll do great.
Exactly. So none of that JCPenney deal, that you're never going to see that. Nobody's ever going to be talking about something like that. It's boring. It's real estate. There's nothing exciting about it.
Yeah.
But if you have, uh, I have, I've been blessed with just endless curiosity. And, I think that for people that are intellectually curious and have the time to go out and read company filings and run stuff through Claude and ChatGPT and whatever, and try to really dissect these companies and figure out what they own, and is it cheap, and is there a catalyst to unlock that value? If there is, then it's a really interesting path, because you can invest in real estate. There's I think there's like 8,000 publicly traded US companies. So there's a lot of opportunity if you have time and can start looking at, I don't mean 8,000 real estate companies, 8,000 total, but once you start narrowing down your list and cross stuff off and narrow your universe down into certain things, you can start looking through those ones. And if you spend enough time looking for them, you will find interesting opportunities out there.
Yeah. Yeah. It's funny. I was listening to a podcast earlier today, and it was basically, long story short, the guy has had a very productive career investing in businesses, and he buys the businesses and he puts in an operator and all of this, and like he he talked about his like day-to-day schedule, and he's like, yeah, I have like two things on my schedule. Like I don't, because he prioritizes time to do what you're talking about, is like making like intellectual curiosity and making time specifically to look for and seek out and think about opportunities. And I think like so many of us just get caught up in, I got to check all these things off my list. But if you actually sat down and thought, okay, well, I mean, everything you just described is like, yeah, that makes total sense. Like, of course there's some opportunities there. There's opportunities around us all the time. And it's like, we we fall onto them sometimes, but I think like it largely because we don't leave time to sit in, like really do, people call it like deep work. I've heard Alex Hormozy talk about it a lot. He sets aside time, like nobody talks to him, his phone's off, like literally just to think of the new ideas.
I was just going to say, thinking is something that is so overlooked today.
Yeah, really. I mean, I think Bill Gates too. Like maybe it might have been, but he would go on those trips. Goes away and like locks himself in a cabin for a week with no contact with anybody, just to think. I don't know if he still does it or what, but like it seems, you follow the breadcrumbs, like that some of the most successful people are taking that time to step back and like, okay, what do I, I'm sure they have some structure around how they did, and you as well. Like, I'm sure there's some, it's not just randomly, I'm going to sit here and try and think of things. Like, I'm sure that there's some catalyst to how that works. But, I mean, how do you, I guess, just respond to that? How do you approach that in your business
Nobody
ideas?
ever asks about this, so I'm really excited that you're even asking about it. So I think it's not even, I have tried that Think Week type of thing where you go. I got an Airbnb a few years ago, and it was really good. I wish I could do it more often. I have a 3-year-old and a 1-year-old, so it makes it tough. But leaving my wife for a weekend or so. But
my wife wouldn't like it either. I want to Think Week, but the 2 kids would
exactly.
I'd be in hot water when I get back.
Exactly. So I try to do it when I go on walks and stuff like that. I have like miniature think times. But no, I think that doing exactly that, having miniature, where you go out to lunch and you either turn something on that's mindless, that allows you to just kind of live in your thoughts and think, or you just have nothing on and you just think through a
Mhm.
problem, think through. I remember when I was really looking at, a lot of my time now goes to this hard money lending business. But when I was really, really focused on finding these public market opportunities, um, I would find something that looked interesting, and there's always going to be hair on it. There's always going to be some negative thing about it. Otherwise, it probably wouldn't trade that cheap. So
Yeah.
you got to just thinking through those issues, going out to lunch and just saying, I'm just gonna think as much as I can about this one thing, and really just try to deconnect, get out of the house, go on a walk, go to lunch, go on a run, whatever, and think about this thing. It just really, really helps. And a lot of times it just leads to more questions, but those questions can help you get to, like you said, follow the breadcrumbs and get to the answer that you need. Um, so, and I think a lot of times in investing, the answer should be, I can't figure this out. So this is, as Warren Buffett would say, this is going to go in the too hard pile, and you put it in the too hard pile and you move on.
Mhm.
So yeah, no, I think that's how I'd respond to that.
Yeah. No, it's great. I think it's a hard thing to do. It's a hard thing to take that step back and say, you know what, my time is actually, like, I am actually creating value by stopping to think. And it's hard, there's always so much going on that it is hard to find that time. But I do think the evidence is there. Like, more and more, the evidence is there that, the very that some of the most successful people, just, they take that time, and they do spend time on thinking. And it's like, there's a reason why that works. And but
Warren Buffett. So he's one of my obviously one of the greatest investors to ever live. And Charlie Munger, his longtime partner, would say that it was the funniest thing ever, because they would look at his schedule and it would say, for the whole day, his schedule would be get a haircut. Like, that would be his only thing, because he
Yeah.
was just thinking, and he wanted to leave that margin open to think through different investment ideas he was working on, or whatever. And he didn't, you think about a guy like that who's worth hundreds of billions of dollars. I believe he's, at one point or another, he was the wealthiest person on the planet. And you would think that someone like that would just have a jam-packed schedule from sun up to sundown, and sleep for 5 hours and wake up and do it again. And if you learn about Warren Buffett and listen to him, it's absolutely not the case. It's all about simplification and deleting the things that that don't matter, and all those shiny objects and all those things that I think we're all somewhat guilty of chasing. Being able to delete those and just focus on the things that are, the important things. That's super, super important. And that's how you just stick to those high leverage things that are going to lead to the best outcomes.
This is going to sound like a crazy thing to say out loud, but I feel like I'll work through it. I feel like you mentioned, at one point Warren Buffett was the, richest person in the world. And I feel like, of all those, if you look at that list, like, of all the people on that list, especially, the last decade or two, he is the most like us, I guess, like a regular, like, he's done it as sort of a regular person, in the sense of, like, the other people on that list, like the Elon Musk, Jeff Bezos, like, they have tech unicorns,
Mm-hmm.
right? Like, that's how they made their money very fast, and they have tech unicorns, and they're uber successful in a different light. But, like, if you look at Warren Buffett and his career and what he did, like, it's the most repeatable, I think. Like, if you truly sat down and said, okay, let's look at what he did in his life. Like, and I know he started this stuff at a young age. So it's like, okay, if I'm a kid in high school right now, or college, like late teens, early 20s, and I really thought, how could I be successful like for my whole life? And you sat down and study Warren Buffett, like that's the one to forget being the next. It's great, like have dreams, but like if you really want to look at it from a methodical way, I would imagine that would be certainly a more tangible way to approach like amassing wealth throughout life.
Yep.
I feel like it's a weird thing to say, like, your best chance is to be like Warren Buffett, but I think if you really dial it down to its like deepest level, the things he did, and he says it's like a lot of his the quotes that he says and stuff is like very it's just, it's very basic. Be patient, don't lose money, like things like that is like all of those things are hard to do, but if you could follow that, like it's a really great path.
Yeah. It's trite. It's obvious. Everything, a lot of what he says is just so simple, so obvious, but it's like, the more you hear it, you're like, yeah, that is true. What they're talking about on X is, a lot of these guys talking about crypto and all this stuff. It's like, no, don't chase that stuff. That stuff's here today, gone tomorrow. Stick to the boring stuff, stick to real estate, stick to businesses that do simple things that aren't, I mean, look at AI and how much that is disrupting all kinds of software companies. All these SaaS companies are just taking it on the chin because AI is just coming in and completely uprooting all that. So, I couldn't agree more with you. And that's, you look at Buffett, he didn't even start Berkshire Hathaway. It was an investment that he made, and then it ended up becoming, it wasn't a very good one, as he'll admit. And he ended up, the textile business that they ended up getting rid of that and started investing in insurance and banks and just all kinds of things like that, just slowly over time. And it just became this behemoth, but it became a behemoth very, very slowly until it was just massive. It wasn't like Jeff Bezos, where he starts Amazon in 1994, they go public in 1997, and he's already a billionaire in 3 years. I mean, that's crazy. Buffett didn't become a billionaire until he was like in his 50s. It took decades for him to get there, and then his wealth goes up exponentially. But yeah, no, I couldn't agree more. And reading all his letters and seeing what he does, it certainly inspired me. And it's like, I don't have to go out and start this tech company. I'm not a tech guy. I don't have to go out and start some tech company that's going to become the next Meta or something like that. I can just slowly do things, stick to hard physical assets. That's certainly what has attracted me. I've never really been a crypto person. I know guys I know have made a lot of money in that space, and good for them. But it's just not, I don't understand it. It doesn't make sense to me. And, real estate does. Businesses that are boring and hard asset type of businesses, those make sense. And I think that's, for me at least, that's what I want to focus on. And I think if you stick to those principles and don't over leverage and don't get involved in things you don't understand, if you just stick to those simple things and avoid the big losses, you'll do okay.
Yes,
it is more than okay.
Right. He did okay. He did okay.
He did okay.
No, it's so true. But Will, I want to switch gears just in the interest of time and
Sure.
ask you the questions I ask every guest. The first one, the name of the show is Know Your Why. So everybody gets this one. What is your why? What's kind of motivated? I heard mention of some little ones, but what's the why behind your success?
Yeah. So I'm a Christian. I'm a follower of Jesus, and I want to use the resources that I've been blessed with, and I want to go out and just use the mind I've been given, and all of that to generate resources that can ultimately be used to fund initiatives that are advancing the gospel and getting the gospel into unreached places throughout the world. So that's my ultimate driving thing behind what I'm doing. And obviously I love my family, and I want to support them and do all that. But I would say the main thing, because once you earn a certain amount, and once you get to a certain level of financial stability, then you can start thinking beyond your immediate situation, and that's where I want to spend my time.
Yeah, fantastic. Yeah, I that's people like to sometimes I guess look at wealth negatively, but I think that it just needs to be used in this.
It's just a tool.
Yeah, it's just a tool, and it's like if you're stacking piles of cash in a room and just sitting in there,
right,
rubbing your hands together, like, sure, that's not a good use of it. But if you have a mission, if you have a purpose behind what you're doing, and it's to sort of reach people outside of yourself and your own family, once you know that those things are taken care of, like, then it's like, well, there's not too much. It's like, well, how much can I help? How much help can I actually provide? And that's almost an endless need out in the world. So that's great. When people hear this and they want to connect with you, what's the best way for them to reach out?
Yeah, they can just go to my website. It's harvey-capital.com, or just shoot me an email, will@harvey-capital.com.
Okay, we'll get that in the show notes. Will, this was a great conversation. Really appreciate your time, and enjoyed everything we talked about. So thank you so much for being on the show today.
Likewise, Jason. Thank you.
Folks listening, make sure you connect with Will. Please like, rate, and review the show. And as always, thank you for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?